The only central bank short gold, which is, that's the Fed, forced to revalue gold, which a consensus of first-tier liquidity providers suggests at latest after we enter the physically driven 2024 marketplace. As I say, not very far away. Now, the only gold and silver traders not seeing this gold revaluation play are the siloed COMEX speculators.
Gold and silver will increase in attractiveness relative to other asset classes. I'm a big fan of liquidity. I regard gold and silver as good, if volatile, liquidity. And I regard the Sprott physical gold and silver trusts as convenient, low-cost alternatives.
In today's episode, two financial experts, Rick Rule and Andrew Maguire, discuss their gold and silver price predictions for 2024. They talk about the current fundamentals in the precious metal sector, as there is a strong possibility that gold and silver soar in 2024. Make sure you hit the like button, smash the subscribe button, and turn on the notifications bell to be on top of our financials, experts' insights on the commodities markets. Enjoy the video.
Physical precious metals take the form of cash. If you have a circumstance where, as an example, the government institutes a central bank digital currency, and if as a consequence of the way you speak and feel, the way you present yourself on social media, they cancel your central bank digital currency, which they can, you would be very happy to have gold and silver, which you could exchange for other forms of value through barter. My suspicion is that as consumers become more concerned about fiat currencies and they become more concerned about the structure of the financial world, that gold and silver will increase in attractiveness relative to other asset classes. Will this happen next week or next year? I don't know. But I'll tell you this. When I look at the proliferation of currencies, including cryptocurrencies, I'm increasingly attracted, and I was already attracted, to gold and silver as a partial store of value for my own estate. I would urge your listeners to think about gold and silver as a form of liquidity. And I would urge your listeners, despite the negative real yields around holding US dollar denominated cash, to hold some, whether or not they hold it in the banking system. I'm a big fan of liquidity. I regard gold and silver as good, if volatile, liquidity. And I regard the Sprott physical gold and silver trusts as convenient, low-cost alternatives, as ways of maintaining gold and silver liquidity that don't involve physical possession and don't involve the transactional premiums that often are present in other forms of gold and silver ownership. I don't regard as one as necessarily a substitute for the other. I personally own both physical gold and silver, and I own the Sprott physical trusts. Depends on how you define the banking system. In the first instance, there's no federal deposit guarantee. Which is to say that the government won't make good your losses if they occur in PSLV and PHYS. They are instruments that have no countervailing debt against them, which is to say, when you look at it as an entity, these trusts have no debt and therefore don't have the threat of leverage and don't have the threat of a bank run. They are very simple businesses. To the extent that we had a broad-ranging financial catastrophe, where, as an example, the New York Stock Exchange shut down, something which, by the way, I see very small.
In 2023, silver prices held steady despite some major factors like potential U.S. interest rate cuts and global tensions. As we step into 2024, all eyes are on the Federal Reserve's moves and the possibility of lowering interest rates to prevent a U.S. recession, though uncertainty lingers about the timing and effectiveness of such cuts. Predictions show an 88% chance of of a rate cut in March, which could make it cheaper to hold on to silver, especially as the US dollar is facing its weakest performance in 3 years. This shift is driven by expectations of Fed rate cuts after a rate hike cycle in 2022 and a focus on slowing inflation. Silver's outlook is cautious, with concerns about credit market risks, but the potential for higher silver prices remains dependent on the Federal Reserve's actions and market stability throughout 2024. Now, we'll show you clips of Rick Rule and Andrew Maguire, but first remember to like, subscribe, and turn on notifications so you do not miss out on our daily videos. Also, check our pinned comment for a very special sign-up bonus. Enjoy the video.
Kicked off following the Bank of International Settlements revaluing physical gold as a first-tier asset class on the 1st of January, which is when gold began competing against US treasuries. Now, providing central banks, sovereigns, commercial trading advisors, and investors an alternative, far superior, zero counterparty risk alternative, safe haven investment and hedging vehicle. Now, during the course of this year, this alternative safe haven pivot sparked the largest central bank sovereign physical gold demand in history, severely impacting available global supply. None of this is seen inside the casino. Market footprints evidences central banks hedging previously unfactored US Treasury tail risk by their actions is already weighing on Treasury demand. This lack of Treasury uptake that's actually been spiking the bond yields higher as central banks, alongside institutional investors who have a global view, seek real asset alternatives, which of course include cash, but also gold. And under the Fed's induced smoke and mirrors haze, every central bank, including the Bank of International Settlements, who 1 year ago, almost to the day in November 2022, bought back their entire gold derivative positions, concluded it on that day, taking advantage of the Fed's synthetic attempt to cap the dollar price of gold. Now, note, though, that despite the Fed's best efforts, exactly 1 year later, gold is carving out a higher stairstep, over $350 per ounce higher than the $1,618 point, the exact point the Bank of International Settlements covered the last of their bets against a rising gold price. Look, there's only one reason gold is carving out a higher stairstep to rally from in 2024. Every other global central bank, both Western and the entire global South, have been openly on record as well as surreptitiously off record buying physical gold. And this leads to just one conclusion. Global central banks are accruing physical gold so they can revalue this gold at close to the market price. And when any one of these central banks commences this process, it will trigger every other central bank to synchronize. And as soon as this happens, the Fed will have basically one of two options. Either they admit they've sold title to the Treasury gold to multiple parties. Well, clearly that's not an option. Or they're going to have to move to revalue this 831 tons of rehypothecated positions in sync with global central banks so as to avert what would be a foreign exchange imbalance. Bear in mind that gold's a foreign exchange cross. So it would create an FX imbalance, which would trigger multiple repatriation requests from other central banks requiring their undervalued gold to be returned for jurisdictional revaluation purposes. Now, if the Fed does synchronize to also value foreign exchange gold against the dollar, it would be the only way they could maintain their rehypothecation illusion, thereby averting unwanted repatriation requests.
What do you think of today's show? Are Rick Rule and Andrew Maguire spot on in their forecasts for gold and silver for 2024? Let us know in the comments section your opinion on the matter, as it's very important to us to be on top of our viewers' insights and opinions. Thanks for watching the video till the end. You're the backbone of our success, and we hope to see you on the next one.